Yeah, it says we're up. Yep, it says we're live. Good morning. We're a little early, so we'll wait and see who stops by. Thank you, Jeff. New things, different. It's good. We'll get to, I never really wanted to commit, I guess, um a time frame, a deadline. But you know what? It's probably best. Probably best. So we're gonna try to do this, not noon every day, but we're gonna try to do it Monday, Wednesday, Friday, noon, for 45 minutes to an hour. Answer some questions, take a peek at some things. We got just a lot of stuff, not everything, but a lot of stuff at our fingertips. And we'll see how we do. But at minimum, things won't be. So we'll say good afternoon to everybody, and I will be back here right at, maybe I should put a note in here. Don will be back right at noon. So I'll put in Don will be back at noon, and we'll take a peek at things. Thank you, Jeff, for those leads. There we go. That is Darian, I think, right? El Finito. I think if I remember the names, we'll just give folks a chance. We did something a little different today, and we scheduled a webinar. We'll call it a webinar. It is a webinar on Zoom. Then we got a few folks. So good afternoon. So we did a little different, and I'll just share with folks that are coming by. We we are, I'm going to try to do this, right? I'm really reticent about a deadline or a schedule, but I think it might be better for everybody. I'm going to try to do a live webinar of sorts at noon. If we do it, it'll be at noon. And we're going to try to do it on Monday, Wednesday, and Friday. That'll be the plan. That's the plan anyway, in any case. And when we finish, we'll schedule, right? And I'll try to punch up, 15 to 20 minutes in advance, and hopefully I can commit to that. We're going to try. So we had to do something a little different between Zoom and YouTube, and so we had to put on our learning hats and learn how to do it. I think we did it. I think we did it okay. So a lot going on in the markets. When we do this, and we're actually going to record it, you're going to see Swing Machine. You're going to see it in a different format. You're going to see some of the other tools that we use. We do these YouTube sessions for everybody to create awareness of who we are, what we're about, and who we're not. We're not trying to prove an outcome. Um, we put out a lot of other content and stuff. We're not. And we're different from hopefully everyone else in that we're not handing out the fish. We're not making specific recommendations to buy or sell. I'm not a broker, not a financial advisor. It's important to understand that this isn't just a statement of disclaimer. It is, though, as well. It is that, but it isn't just that. We're not gathering people's monies to manage. We're not. We're a mentoring site, self-taught, not in 6 months, not in 6 years, but over the long haul. For those folks that are interested in trading these markets on an interval of their choosing, in a market of their choosing, and to do so what we call mechanically or robotically hedging. Why do we want to do that? We want to do it so that we can manage our emotions, that we're not making decisions just on the money. That's what everyone else is doing today. Oh, I think the market's oversold, and they got those stochastics. Oh, let's get a trade on it, throw it on, and yay, I made $500. Um, and they will be able to do that when the market is swinging wildly, and or throwing on options. But will they be here in a few weeks, in a few months, in a few years? Probably not, right? I'm going to show you over the next, and we're only going to be together for about 45 minutes to an hour or so. We're going to try to show you some of the tools and answer any questions you have. I'll try to do them as the questions come up, but I'll certainly come back through at the end and answer those questions too. And if I have to take a break, I will. So it's a little bit different, and we got quite a few, not all of our tools at our and I should probably remove that moniker there because I'm back. Not all of our tools, but a lot of our tools. And as a monthly member to Stock Market Caddy, these are a lot of the tools that you get to see on a nightly basis and hopefully get yourself, because it is learn to trade your game, not mine, not Susan's, not Chris's or Jeff's or Ken's or Steve's. It's learn to trade your game. And to that end, every night there are chock full opportunities. We will highlight some of them, but we're more interested in giving you a chance to see what the tools are and to learn how to use the tools, because more valuable than any individual tool is going to be the education and the support, hopefully, to use those tools. Now, if you have the time, have the discipline, the patience, the risk capital, the interest, and really the passion to become what we call a full-time trader or an annual member to Stock Market Caddy. These tools that I'm going to be pointing to and much, much more are available to you to plug on to your desktop. And you set up your desktop the way that you want to set it up and get fully underway. You can patch in during the week to a live Zoom. You can reach us. You can text us. You can call us. To that end, there is a Q school. There is a learning period that one has to go through to become an annual member, but that's a one-time thing. And after the first year, we do want you to know that the annual cost drops to just $3,500 a year. You still need to be a monthly, but it is just $3,500, and we will give you one month free for the first year and 1 month free for the full year. Thereby, by your 5th year, you will have an effective cost of half. It'll be $3,500, not per year, but for a year and a half. And we think it's really good because um, you're going to be very, very independent at that point and really underway. And we did hear this morning, he may be listening. Didn't get a chance to chat much, David. I apologize because we were busy kind of with our own trades this morning. We do trade, right? We trade futures intraday, which we're going to show you. We trade options. David in Germany has been with us now several years, and he just wanted us to know that last week was his biggest week ever. I didn't get his profit factor. I asked, but I didn't get it. I didn't hear what it was. But David's also the gentleman that had a profit factor of 80 in 1 week. 80. If you know what a profit factor is, you can kind of work it backwards. If he lost $100, he would have made 8,000. If he lost 1,000, he would have made 80,000. So it was the latter. And so if he had a week that was his biggest, he had a hell of a week. Hey, Ted, what's going on, buddy? You want to get under my desk? I don't know. We're having some bad weather cutting through Tampa Bay. So hopefully we maintain this connection. So let's get started. Let's take a look at where we are, where the markets are, what we think is happening. And if you got any questions, don't hesitate. So this is a little bit different. This is a Renko view of the S&P, and it is not time-based, and it is a price chart. These little dots are what we call our C points. They're proprietary to us. We have about 70 some odd tools. Those dotted lines across are the swing points, also proprietary to us. And you can see where we came off the bottom. We had that sustained run up, buy. We had a couple of little feints, but buy. And when you clear them or they fail, you got to come out. Could have done very, very well on the run up. And then when we were up in this area, this is where we were topping out. We could see it real time. We could see it on a nightly basis. And then we broke down. We took out this swing, and that marked the start of the decline right in here. Stops up above here. And C point down, sell. C point down, sell. We knew we were coming down to this area here, and they waited for the Fed. Is he going to cut? What's he going to do? We went sideways until the Fed, and then there was this little bounce. We just retraced about half of this move. She topped out, and then she broke down. C point down, and we expected her to come right to here, which is what she did, and she cut right through it. This morning, she's bouncing. Former support is now resistance, and we'll see if she gets above it. Could she retrace the 5,400? She could. For active traders, and that's the thing, you have to know what kind of a trade are you doing? What is your trade resolution? What are you trying to do? I think ultimately, though, we'll have view on it right now. It's a little bit of a counter. I think she's going to struggle up in here. There are some things that you may be hearing and reading about, why the sell-off and everything. We can chat about that. I'm happy to. That's a bit of a parlor game. Oop, just had to say goodbye to Susie. Susie's done. She's headed to the gym. It's a beautiful thing. Susan's not in the market after 12, not usually. She's gone. Where was I? You get to choose your resolution, and and you want to think about that in advance and what you're trying to do. And we were just talking about that here. We like to trade futures intraday because they're highly liquid. They're leveraged. We have market access. When we're trading for position, which we were shorting up here or shorting here, we're using options in defining our risk. I want to slide over though. So you're getting to see something a little different. Let me show you this tool, this is a view of a one of our algos called the Nicholas timing model. And you can see the VIX went long on August 1. It was just a couple of days ago. And went short all four markets. Now, it would take quite a bit of capital to put this on. If you used futures, we have members that did and do. They may even do more than one. They may use micros. They may use options. We're off of our high water mark. The high water mark was, of course, this morning at about 75,000. And we will many times use options to stay in gear with Nicholas. And we have monthly members that routinely, they see this. This that is great. Oh, great, David. He might be watching. And we have folks that will take these signals from the algo, not from me, but from the algo, and define their risk and put their option trades on, if you're familiar with options. Let's slide over. Now, we're not going to go through every one of these workspaces. I don't think we'll have enough time, and I don't want to swamp you, but we have other tools that we use, and these radars speak to us in English. We do use charts, of course. All of these codes are proprietary. They don't use moving averages and stochastics and MACDs. That stuff is going to get a lot of people into a lot of trouble if they haven't already. The notion of being overbought, oversold. This is the Swing Machine, which is a trend identification system, very, very unique. And this is the 9-day VIX, 9-day, 30-day, 90, 6-month. We went risk off 13 to 14 days ago. Now, we can discuss why the market sold and the rational side of things, and people, is the carry trade, and it is the carry trade, right? But we all know what the carry trade is and was, and people have been talking about the carry trade for years. Our members know that we have. We just never saw the manifestations of the unwind. What we did this month, we did. And it was actually brought to my attention by one of our members, Chris in Jacksonville. Like, Don, look at the yen. So thank you, Chris. So like I say, more valuable than any of the individual tools is the education on how to use the tools and how to interpret them. And then it can be a very collaborative effort. The VIX futures is very important to us. It's been risk off for 8 days. Risk off. It's the trend that's important, not the number. Prior to the risk off signal, it was risk on for 60 days. When that VIX futures on Swing Machine is risk on, we want to buy every dip. We do. When with options, if we're defining our risk on a daily basis, when that VIX is risk off, we want to be in a mode of selling every rip. If you're going to follow Davey Day Trader, he's going to put you in the poorhouse. He may be a great gambler, great guy, a lot of fun. He's got the green hammer, but he's going to lose his ass in the stock market if he continues with it, right? It's nonsense. He doesn't know what he doesn't know. He's a nice guy. He grew up in the town, I was saying this earlier, right beside me. He grew up in Swampscott, all the rich kids. I grew up in Lynn, right next door, street kid. He doesn't know what he doesn't know. Skew is trending down, but it's high at 139. Here's the S&P breaking down. Very, very bad. Very, very bad actions. You can see the gaps. The gap downs don't have to get filled. They don't. The gap ups always get filled. And we got one right in here. I don't know if you can see it right here. It's going to get filled. We got another one. This one did maybe get filled, but we got other gaps down in here. Now, I'm not saying that this move is going to be the move that fills those gaps, but they will get filled. They absolutely will get filled in time. We'll take a look at the yield curve, talk about interest rates, and the yield curve is fully inverted. I didn't type this in. The machine does that. It's programmed to know when the yield curve is negative and when it's positive. It isn't a signal to just rush out and buy or sell. It's just to let us know what's happening with the economy. The yield curve went negative on November 9th of 2022. Now, most people have no idea what the yield curve is, what it's about, historically, how we interpret it. Usually 15 months to 16 months after the inversion of the yield curve, the economy will be in recession. And it is in recession. It's been in recession. It's going into recession. It is unavoidable. What's happening, these are the yields. This is 90-day paper, 5-year, 10-year, 30-year. The yield isn't 50%. It's, you move the decimal, it's just the way this gets reported, is 5%. 3.6, 3.8, 4.1. Now, if that doesn't make sense, it doesn't make sense. You go to a bank, you say, I want a 90-day treasury. You go to your brokerage, you get a 90-day treasury. They're going to pay you on an annualized basis 5%. And you say, well, I don't want 5%. I want something more. How about if I give you my money, Mr. Government, for 5 years? What are you going to give me? 3.6. What? Why would you do that? Right? You won't. You won't. The only thing the Fed can do is manipulate, money flow, and interest rates. The interest rates on the 5, 10, and 30, as you can see, are going down, rapidly going down. I thought that was good for the economy, right? Maybe a lot of people think that. Not necessarily. They're going down for a bad reason. When the billionaires start selling stock and getting out of the growth, they need someplace to put their money. And they put it into the treasury market. It's much, much bigger. When they buy bonds, the yields go down. They're not looking to get a return on their money. They're looking to get a return of their money. The problem that the Federal Reserve has is not the S&P. It is not the stock market. They don't give a shit, about the stock market or you or me. Their only job is to protect their big daddy, the New York banks. That's their job. They are the titular head of a banking cartel. Banks borrow money from each other, from the Federal Reserve on a short-term basis, and they loan it out. If rates are dropping on the far end that the Fed cannot control, the banks cannot be paying 5% short-term, or they will have a banking crisis very, very quickly. So they're going to have to cut. There are ramifications for that. I'll let others discuss it. You can think about what that might be, but they have to cut. They don't have a meeting until September, an official meeting. They may wait. They have the Jackson Hole meeting the end of August, and then you have the likes of Jeremy Siegel at Wharton, who couldn't trade his way out of a paper bag, but is probably a great economics professor, pseudoscience. And he is screaming for the Federal Reserve to hold an emergency meeting and cut 150 basis points. They could do it. They might panic. It could steepen the yield curve a little bit. It would be just financial engineering. Would the market squeeze higher? It would short term, but I think ultimately it could roll over. But it isn't the Federal Reserve that sparked this by not cutting rates. What we think sparked this is the yen, which we'll look at in a moment. Any questions? A lot to consume, a lot to show. Let's just take a look at this is our sentiment radar. Put our marker back up there. Oop, there we go. Oops. Oops. I don't know why Zoom keeps doing that to me. Oh, I lost my marker now. Isn't that crazy? Oh well. I guess I goofed that up. That's okay. You guys know it's Stock Market Caddy. I lost the writing. Here, let me just put it. I'll just black out down the bottom because it's probably a little bit cleaner, so you don't see my not that it matters, but bear with me. This stuff here is kind of probably noisy to look at. And we'll just slide that over. How's that? And I won't take the time to write that up. I'll just kind of darken it up. How about that? I tell you what, I will do it. Be the labor greatest small. It'll take me a second. I'll just type it up. So people come in and they're like, what is this? It's stockmarketcaddy.com. And bear with me. I'm sorry, I messed it up. But what you're looking at is a sentiment gauge, by the way, while we're doing this. We'll type this in up here. And it gives some wonderful signals. Trade signals. On a daily basis, primarily. Great for options. There we go, Stock Market Caddy. So notice here, see the yen? This is where Chris, one of our members, pointed out back on July 9th. He's like, Don, look at the yen. The yen was down to like 0.61. See where the yen is now? It's up in euphoria. It's at 0.69. The yen started to rise. We saw it. And it rose before. And about 10 days ago, I think it was about 10 days ago, last week, the Bank of Japan did raise 0.25% and strengthen their currency. And you might say, well, what difference does that make? Well, if you're not familiar with something called the carry trade, you can, research it. But basically, this is what they do. And Mark Cuban has talked about this. Mark Cuban has done it with his billions. He probably doesn't have as many billions today as he did yesterday or last week. And he's probably not on Twitter right now. He's probably got a hairball caught in his throat. When the yen was trading some years back at $1.75, it was at a 45-year high. And Japan couldn't have that. And they set about monetizing their debt and cheapening their currency. The trade on the carry trade is when you have billions and billions of dollars like Mark Cuban, and you got great financial advisors, what you do is you look for the cheapest, weakest currency in the world, and you short it in billions. And that's what they did. As the currency falls from $1.75 to 0.61, 62, just, short week or two ago, you're making a killing. You're making billions. What do you do with that billions? You pour it into another market in the world that is a growth market that can give you the juice, and that would be the NASDAQ and maybe crypto. And you make even more billions. And you can be fat and happy, and you can be on the Twitter sphere talking about, you got to, the government needs to pay for this and pay for that, a la Mark Cuban, because you see, when the government pays for everything, there's inflation, and inflation is a tax on the poor, but inflation for a billionaire is something good because he owns assets and he gets richer and richer. So they can come across as holier than thou, altruistic, and just be getting, generational wealth. But something happens on the way to the forum. When the yen rallies, that's a problem. And when it rallies 20, 25%, what does Mark Cuban have to do? He's got to sell his risk assets. And then what do they got to do? They got to cover their short trade on the yen. They got to buy the yen. And it makes it even worse. That is the unwind of the carry trade. And it was sparked. We saw the yen rising because people probably knew in Japan. It was sparked by the raising of the quarter point, just a quarter point. It had been at zero for years and years. Japanese bonds, they call them JGBs, would trade by appointment. So that's a big problem. And quite frankly, I'm not sure that our Fed cutting the rate is going to impact that much. And don't think for a moment that our Fed and the Bank of Japan were not coordinating what they're doing. So, but we got visualization on it. There could be a pullback in the yen. We can also look at the sentiment on ETFs. We want to be looking to be buyers potentially, or call options, in the panic. And in euphoria, when we were all in euphoria, we were selling. Here is we can do the same thing with the sentiment gauge on 500 stocks. And we can sort everything that's in panic and everything that's in euphoria. And we can trade all kinds of opportunities from here, which we take our time going through at night. Same thing with the NASDAQ. We can sort Intel. Intel, great story, right? Down 30% on Friday. 30%. That will what should we, I appreciate the question. Tied to today's discussion, what should we be doing with the IRAs and 401ks? I can't answer that for you. Because I'm not a broker. I'm not a financial advisor. I'm not. And only you can decide that. Our tools are very helpful in making those decisions. The Q School is what ties it all together, is the education. At the end of the Q School, you would have a really good idea, but you have to make that decision. So that's not a cop-out. It just is. And I think, it's your money. It's your life. It's your savings. I don't want some Yahoo at Edward Jones or some Yahoo at, Mother Merrill, sitting in a corner office telling me what I should or shouldn't do with my retirement funds, right? I'm going to make those decisions. So again, that kind of highlights what we're about, right? So, it wouldn't be responsible for me to say. And a lot of that does have to do with understanding how markets react. And it also has to do with your time frame too. What is your resolution? Are you a trader? Are you an investor? But also, where are you in life, right? I mean, are you in retirement? Can you put the money back if you lose it? So, but we go through a lot of those questions in Q. Here's Pebble Beach. This is a fantastic tool. This is a trade generator. These are all signals today. They all occurred today. Can you guys bear with me 1 minute? Susan turned the AC down and I'm literally freezing. I got to get a sweatshirt on. Hold on. I think it's because it's not so hot out either, because we had this storm go through and it's not so humid. So the house is freezing. Bear with me a minute. I'm freezing. Okay, sorry about that. The dogs love it. The Goldens love it. Um, all these signals were generated today on Pebble. Another in fact, this is the radar and the tool that we used before Swing Machine. So it's just one of. The trade purse is being calculated based on a $10,000 trade, right? Now, maybe a person used or a member used options, So you can calculate, that this short on Allstate today, now click on it, went off. The entry price was 173.89 and the stop is 179. And that certainly could have been had because you can see it. Sometimes, it's a gap and you may not be able to get it, but most of them you can. Not unusual at all for this to have generated, 22 signals and profitable in every single one but one. What will happen is over the next few days, there will be a rally. And we suggest all of our members keep this tool present because when that rally comes, it's going to light up like a Christmas tree. And then you just fire away with your options if you know how to use them. This is the only place where we use moving averages. The only place. And it's called the Retail Trader Radar. We want to see what they see and what they're thinking. And they use moving averages. So we can plug in all S&P 500 and we can sort, we can do a lot of things with this, but we can sort all the stocks that are racing underneath their 5-day moving average. A lot of the money managers out there or, the stock pimps, they won't add to stocks that are under their 5-day moving average. They will add to the ones that are over. And we can see, these getting hammered. These are the ones rocketing. Notice here too, Kellanova, probably, I don't know what that does, but Clorox, you got a lot of defensive companies in here. This is a unique tool. It doesn't do it dynamically. We have to plug in some numbers, but this can give us the overall breadth of the market. And we try to do this once a week for all of our members. Annual members can do it themselves any day they want. And we can get the overall breadth isn't 10%, but when it'll calculate that. When the overall breadth of the market is at 10% or below, which it isn't, right? It hasn't been filled in. We know that we want to be buyers. And when it gets over 90%, which it recently was, it was up quite high, that alone, we probably want to be sellers. This is another beautiful tool. This is the options club selector. This tool, we can plug in all 500 stocks or the S&P, you can do the NASDAQ, and this will tell us the stocks that we should be interested in getting long. Please don't, rush out and buy these, but it'll not only tell us what stocks, it'll also tell us what style of option we might want to put on over the next 30 to 45 days. It's a great tool. It's a great tool. And let me show you, you can slow this down and take a peek at them. The mistake that people make with options is they're trying to place options based on what a chart is doing. Probably not a good idea. Options are all math. We get our options from here. And then you can configure them differently, but this is how the machine is suggesting they should be configured. And it's based all on math. Get them from here and then look at a chart if you need to. But these would be the longs. And then over here, these would be some of the shorts we would be looking at. Not as many. There had been stacked up a ton of them, and we did short them. And yet another radar that gives us, this is all math, SMC options expected move radar. So we can come out here over the next 10 days and sort and find out what is the options market pricing in for a move on the SPY, about 4.26%. Doesn't give us the direction, probably going to be a bounce, maybe, but that is the expected move. The stock expected to make the biggest move is this thing here, Lumen, in these stocks. Now, there could be earnings, there could be anything. It, again, doesn't give direction. AMD is sticking up, getting a bit of a bounce. But this tells us the percentage move. You can actually plug in any time frame, but because we like to do our options 30 to 45 days, we have it already preset. And this is how we cull out our options. We want to know where the jello is moving on the plate, right? You don't want to be doing, maybe you do want to know, maybe you want to do it the other way. You could. Let's say over the next 30 days, you want to know who's going to make the least move. PP, it's not likely to move over 30 days, 5%, so maybe that's what you want to do. Maybe you want to sell some options, some boring options against that and just collect the premium. So, I shouldn't say that, sometimes you want to put options on stuff that isn't going to move. Maybe that's going to be your iron conduits. By the way, back to the club selector, I forgot. It also can give you iron conduits. And here they are. For option traders, if you're not familiar with what these are and how you do them, we cover that in Q School. But these would be the stocks that would be the best candidates for iron condors today. Let's keep sliding over. Now we get back to Swing Machine, right? Swing Machine. You can see Swing Machine on a daily basis. Now it takes quite a bit of capital to take futures, overnight. But this gives us a view. The VIX, here's the VIX Swing Machine long 8 days ago. An indication that we're probably headed for some trouble. The Russell is still long on a daily basis. It's dipping. It's underwater too. Swing Machine doesn't get them all right. It doesn't. But the ES just went short 2 days ago. It's trending down. The NQ went short 8 days ago. It's trending down. On a daily basis, you'd be up 16 grand. And the Dow is still long, but dipping. And we can do this on any market. Do we have Bitcoin in here? I think we do. We'll go look at it. We got Bitcoin on another view. How about that yen? Where's that yen? See that yen? That yen went long 9 days ago. At what price? 0.65. Chris went long that below 0.63 because he picked up on it earlier. That is the problem. So unless our Federal Reserve knows how to devalue the yen, which maybe they do, that's the problem, not our interest rate, in my opinion. But we'll see. And then it could be, oops, maybe I did see the Bitcoin. Did I see the Bitcoin in there? No, we'll add it. We'll see it in a minute. And you can also do Swing Machine with ETFs. Now, we color code Swing Machine from green to blue for the stocks. So if you have your ETFs in your IRA accounts, then you can get a pretty good view. And Darian, to answer your question, what might I do with my IRA and 401k? Well, these are the tools that you would learn to use to make those decisions. And you don't need to go to anybody, not me, not the IBD, not New York Times, not CNBC, but this is where you would make those decisions over time and understand how it's used. By the way, you want to change them to a weekly. You don't want to make daily decisions in your retirement accounts. I get it. Maybe not. If you are making decisions to enter trades on a daily basis, you really shouldn't pay attention to the intraday. If you are making decisions to invest on a weekly or a monthly basis, if it's weekly, you shouldn't pay attention to the day-to-day. The daily closes should just be weekly closes. And monthly, same thing. And you can use the same tool, just change the interval. Yes. Yeah. Q school. Yep, that's what it takes 3 weeks. Yep. Now, David in Germany has told me, it's like, Don, Q school probably should be longer than 3, but we pack it in. It takes time. Um, let's go take a peek at Swing Machine. All right, now this is Swing Machine. This is also where you can make individual decisions. This is Swing Machine Blue for all this is the S&P 500. Exact same tool that you've been seeing intraday. And here's the trade signal, and here's the entry. So let me just show you. This can tell you how many days ago this thing went short. Same thing, the purse is being calculated based on $10,000, or the percent return is calculated here. So what I'm going to do here, there's 500 stocks here. We can't possibly go through them all, but we do show this at night every night. Try to every couple of nights anyways. But if it's sitting on your computer, what you could do is, let's click on this. And I'm gonna show you all of them. So for Swing Machine, the very top stock who has generated the biggest return is actually GE, not Google, GE. 74, almost 75% return over 185 days. Now the trade is down. Now the signal on these stocks is either long or short, right? It's either short or long, and it could be in a dip or a rip, which we can talk about at a later time, and we talk about in detail during the Q school. What I want you to pay attention to is I'm going to scroll down. I'm going to show you all 500 stocks. But as I do this, just think about anyone else that you're following. Are they prepared to show you how their technology is positioned on all 500 or 100 NASDAQ stocks? Probably not. Now we got them numbered. How many stocks, with the market doing what it's doing, how many, and I don't know, off the top of my head, but how many stocks are we, so let me scroll down. Are we profitable in? So let's scroll. I'm just going to do it real fast, right? So we're not trying, we're just going to stay with me on the percent return, right? We're all green, right? We're positive, we're positive, we're positive. We're long and short, but we're positive, we're positive, we're positive. The red just means they're short, right? To the left. We're still positive, right? We're still positive. Still positive. All right. So now we're down, out of 500 stocks, we're profitable in about 376. So thereabouts. That is low for us. Usually we're 430, 440, 450. So it is a little low. But let's scroll down. And now the yellow ones mean that they're breaking even. Right? So let's just see where we are. Some of these are still a little positive. It's doing this. All right. So 409. So out of 500 stocks, 409 stocks were either positive or we're breaking even. And some of these are trying to get short right now. And then, yes, we are having some drawdowns. We have some losers. And let's show you them. So we got our best performer and our worst performer. And let's see what it is. Let's go all the way to 500, right? It's scrolling down. So our worst performing stock is Newell, which, by the way, would be a stock that I'd probably want to buy and sell calls against. And it's down with its worst performance is 854. 8.5%. The beauty of these tools when you use machinery is they're not going to make decisions on emotion or on opinion or anything else. I can tell you interesting stories, and it is interesting to read and play the parlor game about the carry trade and any of that, but I don't invest in trade on that. I buy the yen when the yen's going up, and I know the ramifications. Now, the other interesting part was we had a discussion about this, and I'm not really sure. Chris and I discussed this. When he spotted the yen rising, I said, I wonder what's going to happen to treasuries. I didn't know. And I thought, well, if they're deciding to prop up, this was the conversation we had around July 10th. I said, if Japan is deciding to prop up their currency and they are the biggest holder of US treasuries, maybe they're going to sell their treasuries, our treasuries, and buy yen. And and I knew what that meant for the reverse carry trade. We discussed it. Chris and I discussed it. And again, Chris was on Twitter. He's long yen. I thought that interest rates would rise because they would sell. But what I didn't think through, and maybe the Japanese have, and maybe this was the whole plan, if they trigger the reverse of the carry trade, then Mark Cuban, when he sells his risk asset, and Buffett and the rest of them that were doing the carry trade, when they sell their risk in growth, they and cover the yen and making it worse, they pile money into the bonds. So maybe the Japanese are selling bonds, but these guys are buying them in a big, big way, driving down the rates, right? So it's interesting, but we don't trade on any of that, right? And I'm not a macro babble guy. I'm not, I don't run around, I'm not soliciting funds to manage and do any of that and make shit up on the fly. I mean, we're looking at these markets intraday and daily every single day, and we just track the footprints of the money flow, and then we just go from there. Most firms are limited to one or two instruments. You have the most related to investing that I've ever seen. Although new, I've done a lot of research on a plethora of. Well, thank you, Darian. Darian says most firms are limited to one or two instruments. You have the most information related to investing that I've ever seen. Thank you. In fact, we try to keep this to normal people. What I mean by that is not, because the way I'm just a normal guy. I don't come from the financial industry. And, I had a guy call me one time and it was from Chicago. It was a nice enough guy. And he said, "Hey, Don, I used to make my living on the floor and I can't trade like this. And I don't know what the hell." And, you know, and I had some empathy a little bit, but, I'm like, you know what? If you had called me when you were trading on the floor, would you even take my phone call? It's like, no. I'm like, okay. So uh, I want to help regular folks. I want, you know, I'd rather. But we did have, where I guess where I was going was, we had a person, unbeknownst to me, that was working for a hedge fund in DC, and all they were trading was oil. He ultimately left because he changed jobs, and then he came clean to me and said, "Don, you can't believe how good your tools are." And he said, "I will sit in a conference room for days and days and listen to these guys jawbone oil." And he goes, "And I just watch your stuff every night, and I get so much more out of it." So I don't know. I didn't work for a hedge fund. I never worked for a bank. I'd be out of my mind if I had to sit in a conference room and listen to a bunch of people jawbone any of it. It just makes sense to me. And if it makes sense to you, that Cuban's going to lie to me, Buffett's going to lie, the companies are going to lie. I just need to be able to track their money flow because they won't lie with their money. And if I can do that, I'm probably going to do okay. That's the presumption that we made when Susan and I built these tools or started them in the early 2000s. All right, let's just keep rolling. We can do this with the NASDAQ 100. Maybe we should go see what's going on with Intel, right? We got something here. What is this? This is Walgreens? Oh, okay, well, but it's a short. It was 139 days ago. Swing Machine went short Walgreens, and they're closing stores like crazy around here, including CVS, right? Down 51%. If you own Walgreens, I'm sorry. Maybe you didn't short it in your IRA, but if you got out of it, you could have saved yourself a 51% haircut. You could do it. I'm not going to do it. You got the tools. You do it, right? The other thing is, I should mention this. I've had people say, like, you don't make any recommendations. You don't manage any money. Where the hell do I, you don't even have an alert service. You don't even have an alert service. No, I don't. because annual members have these tools on our desktop. You set your own, we show you how to set up your own alert service based on what you want to see. You want to know when these things trigger. You wanted to know when Walgreens said on a daily basis to get short and alert you on your phone. You can do that. I'm not going to do it for you. You do it. You got the tools. You do it. Nobody's going to watch your money like you. And it just isn't worth it, you know. And we thought about it, just isn't. It just isn't, you know. But it is fun. I mean, for the person that wants to do it. It's a lot of work though, and most people probably don't want to be bothered. And that's okay. But let's shine through here. And then we'll focus in on, so follow the percent return. We're green, we're green. There's 100 of these. NASDAQ 100. We're green, green, right? They're short. Most of them are short. All right. So out of 100, 85% are profitable. And now the yellow ones, they're even. And now the red ones, we got 8 or 9 of them that are down. And what's the worst one? PayPal, of all things, down 7%. They actually improved some of their tools, so they actually might be getting a little better. But how about Intel? Let's go see what Intel's doing. So you hear something online, you say, oh, you know, so and so, is recommending something. Well, don't come to me, just go to your tool and find out. So let's go get Intel. Here's Intel. Intel went short 8 days ago. Just 8 days ago at 31.10. It's at 20. Somebody knew the earnings in advance, probably. If you had put an option on, you're pretty fat and happy. Chock full of opportunity. Now, if you don't know what a put is and a call is, and you don't know what a debit spread is, and you don't know what a credit spread is, and you don't know what a condor is, and you don't know how to do that, well, you need to learn. And we will cover that very, very succinctly during Q School too. Let's go to the intraday. Intraday traffic on the hourly. How far in advance? It tells you. So here's Intuit. This is Swing Machines. So on a daily basis, it's lighting up white. It's telling you that it's trying to get short right now. It's on when it's white like this, and we teach this in not YouTube, but in Q School. When it's white like this, it means that we're trying to get short, or the machine is trying to get short, but it's unconfirmed. If the conditions that set this off stay true for one more day, it will turn red, and the signal will get a 2 shrouded. So you need 2 days. So for instance, the signal, that's why we call it signal in bars. Let me scroll this up and answer that question. It's a good question. So this signal on Dash went confirmed 2 days. It confirmed 2 days ago. The signal came in 2 days ago, and it's now confirmed. And it's up 1.46. This short was 2 days ago. It's up 2.26. This long, 2 days. It's on its second day. It's up 1.13. This one is down 4. But it still might come in, be profitable. So these are the number of days. The signal, this alerts you, but the signal is this 2 shrouded in white. That's when it confirms. But don't feel as though that you gotta get like, I gotta be early. I gotta be early. I gotta be the first one in. You don't. And you don't have to be Johnny on the spot and get the second day. What you don't want to do is miss them. So for instance, let's scroll down and watch what happens when you get out like 7 days. See, they're all profitable. So you still got plenty of time. So like this one here that's long, maybe it's still hanging in there, but maybe, you could get some options on it. So you don't feel as though you got to be the first one, right? It's a lot of times it's the second mouse that gets the cheese. Intraday, the ES on an hourly basis went short 47 hours ago. I don't have the hourly in here. I should put it in. Let me do it. Data. Excuse me. let's see here. Okay. Entry time. Add entry time. Okay. So, all right. So on an hourly basis, the ES went short at 1 p.m. on the 1st. Today's the 5th. So if you had shorted it at 1 p.m., you'd be up 12 grand. If you shorted the NQ at 1 p.m., you'd be up 20 grand from Thursday. If you shorted the Russell 50 hours ago at 10 a.m. on the 1st, at 10 a.m., you'd be up 10 grand. The VIX, if you went long at 11 a.m. on the 1st, it was the 1st, it was Thursday, you'd be up 11 grand. And then the Dow, 8 grand. How much is that? 12, 32, 42, 52, 60 some odd $1,000 on an hourly signal. Now, let's be sure we say this, okay? The next hourly signal may not be up 50, 60 grand. And it may only last a couple of hours. We've seen hourly signals last 2 to 3 weeks. Not all of them do. Does it tell you when to get out as well? Yes. But you can exit, you could exit anytime, if you want to take your profit. But we do teach you in Q school where the definitive out is. In essence, if it goes the other way, you got to get out. You got to take your hit and get out if it's a loss. The hourlies, when we knew that the hourlies have to go short in order to put pressure on the 240. See, and 240 is a half a day. We can do this with stock too, right? You can get inside the retail trader, get inside. And then the dailies are just rolling over now. So the dailies, they were long for days and days and days, but they're under it now. Now the forward tees looks real familiar to you because this is what you've seen up until now, basically intraday. And we start you during Q school trading intraday. Why? You get more practice and you hone it. And then you can slow it down. We can set the interval on anything. And then we're kind of right back to where we are. And you know what? It makes sense that we bump our heads here and come on down. Folks, it was an hour. It's up to you. I'm not suggesting that this is for everyone. It isn't. It just isn't. Most people don't want to be bothered. They don't want to work this hard. Our members work very, very hard. They work very, very hard during the Q school. They work very hard afterwards. It's a time commitment. It's a discipline. You got to have risk capital. You absolutely got to have a passion to do this. Most people don't want to be bothered. They want to do the day trader thing. They just want to throw some money in here. The market always goes up and yada, yada. Yeah, maybe not, right? We can show you all kinds of markets that never come back. We had intraday last week. And that's where David from Germany, we had intraday trades that you could have put on the NQ. You saw them intraday. 1,950, roughly $2,000 intraday on the NQ that went to 14,000. A 700% return in about 2 hours. Does that happen every day? No. Does that happen every week? Not that much, right? Not that much. Last week was exceptional, right? It was his best week ever. We had a great week. But we do get big moves. But if you want to, subscribe to all those podcasts and everybody talk about crypto until the cows come home and how everyone's going to get rich and it's going to go to $1 million, and you want to talk about central banks and yada yada yada, and in the meantime, by the way, we almost forgot, let's go look at Bitcoin. Let's go look at that dude in the Ethereums of the world. Let's see, I'm sorry, it's in here, it's hiding here. Here's Bitcoin. So we're down at $54,000 a coin. If you did now, if you got your Bitcoin stacked up in your basement, that's all right, fine, stack them up. But maybe we put Bitcoin on an hourly basis. And say you got 5 of them, you got them down in your basement and they're stacked up. And you believe that those 5 Bitcoins are going to go to $1 million a coin. Okay. Well, 114 hours ago, at 3 p.m. on July 29th, they started losing value. And the value of your Bitcoins, you've lost on those 5 Bitcoins, you've lost, um, thousands of dollars, 20% of your value. If you had come in to a futures market, if you know how to trade futures and you know how to hedge and you had confidence in what you were doing, you could have sold a futures contract of 5 Bitcoin. You'd have $67,000 in value here, and you'd still own your Bitcoin and you wouldn't be down 67 grand. Hedge, trade, active, smart. It's not going to be for everybody. It just isn't. So I said I would answer any questions. That is the new webinar. And so, Wednesday is probably not going to be much different. The market will be doing something different and we'll show it, but we're not going to be just populating Swing Machine intraday, for hours and hours. It doesn't use any of the traditional stuff, and we just don't want people getting hurt and misunderstanding. If you want to visit our site, look at the site, ask us your questions, think about it. Our memberships are incremental. You want these tools, you want to see these tools on a nightly basis and try and ply your hand with options. We've got a lot of folks doing it. Go for it. It's $100. It's $100. I mean, my word. And then from there, you want to become an annual member. Okay. Well, the first step is going to be the Q School. And then we won't even let you join the annual until you finish the Q. And we're going to ask you to stay in simulation to prove to yourself what you can and cannot do. And then you make a decision from there. And then if you are an annual member, these tools are on your desktop and you're ready to go. The cost is never going to go up on you. I made that commitment to everybody. I'm not going to, well, let me put it this way. Once you join, the cost won't go up. If you don't join, it'll be at the prevailing price, whatever that is. But we do try to add value. We're adding tools all the time. We got a whole host of tools that we're working on constantly. And what was I going to say? You get the live Zoom, but you're going to be doing your own thing. So I'm not going to tell you, quad 1, quad 2, go buy CVS, go buy Walgreens. I got a crack research team working the retail, go buy that. We're not going to do any of that bullshit. It's bullshit. Sorry, it is. Scott is a new member. Great to see you, Scott. And Scott just joined, and so we have a separate website for members. And in that website, there's a whole tutorial that goes into great detail on all those individual algos. That'll take a couple of days, Scott, to digest. And that's what we're doing. That's what we're about. So I hope it was educational. Whoever it is you're following, whatever it is you're doing, it's one thing if you're not making money, you are making money. It's going to fall on you. We have folks that have blown us away. That was them using the tools. It doesn't hurt me. That was them. It will rest on you. Most people don't want to play their own game. They really don't. They want to go to the driving range. They want to spray a couple balls around and come home and say, hey, I hit the ball 500 yards. Okay. To learn how to play golf and play competitively, you've really got to work at it. It takes a lot of time. Most kids today, I think, I don't know if golf is as popular as it was, but it takes a lot of time, takes a lot of effort. You gotta, not you guys here, you're already here, but most of them, they don't want to get off the couch to do shit. I'm sorry. Older people too, right? I'm a big proponent of this. You're not too old. You're not too young. To do any of this, but I can't do it for you. You have to do it for yourself. And I see what's on the internet. I don't see anybody doing what we're doing, and I'm not worried about it. The code for Swing Machine, the code on this is over 800 lines. The code for Pebble is so intricate. Where is that little devil? For Pebble, this guy, this code is so beautiful and is so intricate. It was one of the first ones that we did. It's really beautiful. Nobody's got this. All these codes have to work on TradeStation though, as an annual member. They only work on Trade. And I have no affiliation with them other than just being a real happy customer. This is not plug and play. This isn't like, get a script from this and a script from that, and match it with this, match it with that, and throw the shit in and, have a couple of trades. It isn't. It isn't that. But, you got to approach it, however you want to approach it, right? Make sense? All right. Um, and here is Pebble. And you can, by the way, you can sort this, right? You can dynamically sort these. So these are all coming through today, but we can change the sort on the radar so that we sort the money first. And so then we can tell like which ones are more actionable. Because like if I'm I'm not going to short a $28 stock, but this one here, buy, and it's only up $34. Let me go look at that. Yeah, that looks pretty good to my eye. I might want to, I could plug it into, and then I could copy some of these tools. I could plug it into the option machine and it could tell me, well, what kind of a trade should I put on? Should it be a call? What we like to do a lot is put credit spreads. And so maybe I sell a $300 put and buy a 295, something like that for 30, 35 days. Maybe, as an idea, not to trade, right? We're not here handing out the fish. You've got to want to play your own game. And I just equate it to everything else that I do. Like if I get my golf clubs and I go out to the golf course to play, I mean, I don't want somebody else riding in the cart hitting my shots. I mean, how much fun is that? I mean, why do I want to do that? If I go fly fishing, do I want to subscribe to some guy and and let him go wading out there and catching all the trout and I bring the trout home? I'm like, wow, look at that. I don't want to do that. I want to do my own thing. And I presume that you want to too. And we'll just support those efforts. That's all. This is learn to trade your own game. And that's unfortunately not a very popular message today. We're 5 minutes over. I'll wait 2 or 3 minutes. I want to say thank you for coming by. And let's slide back. We'll let you watch. And if there's any other last minute questions, um, let me know. Let me know. And we cover all the different styles of charts. From time, we do use time charts. We use point and figure. We use Renko, custom Renko, line break charts. A little bit different than maybe the other webinars that you were seeing. A lot more information. And that's really what we kind of want to, what this YouTube session or two is what it's about. We'll come back. We'll try to punch up again on Wednesday. And on Friday might be a little bit different. We might do something different there. By the way, all this can be programmed, and with TradeStation to do it automatically, robotically, we call robot assisted. But Wednesday's message is going to be pretty much the same thing. So you have to make a decision if this is something you want to do. Scott, thank you. He's already made a decision. He joined the other day as a monthly member, and we talked briefly this morning. I just say, go slow. Fortunately, the market's here all the time, right? It doesn't shut down. All right, I'll wait 2 or 3 minutes, but I'll say goodbye now. If there aren't any other questions, reach out anytime. Thank you. Thank you. Okay, we're gonna sign off. Thanks again, and we appreciate the like buttons, push the notification bells, share us on YouTube and Twitter and all those other social media places. It's great, and we appreciate that. And we wish the rest a good rest of the day and rest of the week. Have fun. And if they do rally this market, we will see it and we will act. Take care.